Okay, so let's get started. If you guys have access to it, just pull it up while I'm going over, and it will be a lot easier to understand. If you guys don't have access to it, just message me after stream and give me your Tradingview name, and I'll shoot you guys a trial. So overall, if you guys are just coming in brand new, you have no idea what the Momo is, it looks pretty crazy. What it does is it takes price action and it determines the momentum of the trend and the momentum of the current price action compared to the local price action, looking at a wider demographic, if you will. And it gives you all sorts of things. So today I'm not going to go over everything because I'm going to release a video on YouTube later going over like every single thing in the Momo. But it's going to be a long video. Today I'm going to give you the gist of what it tells you. But overall, it can give you volatility, trend momentum, both near term and long term. It can give you reversal signals. It can give you bear traps, bull traps, divergence. I think that is overall all of it. So for the reversal signals, you're going to look at the shadings. So the shadings on the bottom, the shadings on the top. For the divergence, you're going to look at the histogram or the trend line. I have a separate indicator that does the divergence based on the histogram, but with the current price action, it's very, very choppy and it's getting chopped out a lot. So I'm developing a new algorithm to find the divergence with the divergence finder. But what you can do, if you do have access to the divergence finder, is you can just turn off the signals for now. And then this one. And then you can just draw the divergence yourself. So as you can see, the histogram is just the same as the histogram on the Momo. And it gives you very clear divergence patterns. So as you can see, you can find just about every single divergence on Bitcoin using the histogram on the Momo. I had all these marked out earlier. Let me see if I can remember all of them. It gives you like 7 different divergences in just this small little time frame. I think you have more back here as well. Yeah, you have one here as well. As you can see, it gives you very clear divergence patterns with the histogram. Is the reversal signal based on EMAs? The 1 hour, your favorite time frame? It's not based on EMAs. I can't go over what it's based on because I've had many people trying to reverse engineer it, and people are trying to steal my code. So I can't go into too much detail on how it's determined. All I can really tell you is I created an algorithm and a formula based on price action, and I gave different systems different weighting. So according to that weighting that I gave it, that's how it finds the extensions, the reversal signals. So yeah, the hourly is on Bitcoin the strongest time frame. It's very close second to the daily, or sorry, the daily is close second to the hourly. I'll go over that a little later. But I'm doing heavy back testing on the last 50 signals on every time frame. I've already finished with the daily. I still need to work on the other time frames. The results for the daily, let me show you. The results for the daily signals came out to 36 wins, 14 losses, giving you a 72% win rate. The profit factor was a 2.4. To determine the profit factor, I just took the to determine the back testing, because this doesn't give you sell signals, or so like it doesn't give you take profit signals. It only gives you the entry. So to determine the profit factor, I had to take the highest point in 10 candles and the lowest point in 10 candles after the signal to determine if it was profitable. And base it on which signal happened first, which 10 candle high or 10 candle low happened first. So that's the way I determine the profit factor and the win-loss. But okay, let's go over how to use this very, very simply. So first off, I'm going to start with the basic uses of it, and then I'll go into a little bit of the more in-depth uses of it. But the most basic use of the MoMo, let me break it down for you. So first, I'm going to get rid of the histogram here to make it easier to see. Where is the histogram? Right here, price line. I'm going to get rid of the histogram just to make it easier to see. The most basic use of this indicator is to find extension points to the upside and extension points to the downside. So as you can see, this is the trend line. This is the slower version of the MoMo. The histogram is the faster version. The trend line, as you can see, is very good at detecting highs and lows in between this 20 and negative 20 range. So if we tie that together with the fast line, which is the price line, when they are both in the extension zone, which is the 10 to 20 or the negative 10 to negative 20, it will start to give you the extreme reversal signals. So once again, I'll take away the price line. These extreme reversal signals are notified by the purple and the gold. The other shading, the green and the red, are when the overall trend is extended, but they're not tying together with the local trend. So basically, if you're seeing green, only green, it is telling you that price is finding a bottom. If you're seeing purple, it is telling you that it is very likely that price is approaching its bottom or it has found a bottom. That is for purple. So green is overall it's finding a bottom. So this actually turned purple before it turned green. It usually turns green first, but let's just show you here. So purple would be this section here. It's telling you that price is very likely to find a bottom here. The green is telling you that price is finding a bottom. This actually turned into a divergence. When you see purple into green, it's typically giving you a divergence if price is lower. So if you're seeing price lower here, but then you're seeing the MoMo is higher, this is giving you a divergence. This is actually a divergence on the slow line and the fast line, the trend line and the price line. The trend line is the slow line, the price line is the fast line. This is actually giving you a double divergence. So this was basically extremely likely to be the bottom, which it actually was. If you're looking at this overall market structure, this was the bottom. It gave you a bull divergence on the fast line and a bull divergence on the slow line. And it signaled you to purple here, letting you know that a bottom was very likely. Okay, so now we're going to look at the upside. Well, here, let me signal the bottoms, and then we'll look at the upside. So here you have the purple. I'm just going to give you the overall spots of them. So these are when it's signaling a bottom. And we didn't have one here. We did have the slow line approaching the bottom, but it did not give you a purple. But this was a bottom forming. But it was not that strong. That's why I gave you a green, not a purple. So here are your bottoms. As you can see, it's extremely accurate. The only one that you can consider a failure in the past 5 signals was a bull divergence. So you actually wouldn't have been stopped here. You would have been adding on to your long. So purple, high chance of finding a bottom. Green are overall finding a bottom, or it's a strong downtrend, which I will go over later. So now let's look at the golds. So if it's signaling a gold, it is telling you that it is extremely likely that it is finding a top, or it's becoming exhausted and needs to pull back to the downside. If it's red, it's just looking for a top. So it's in price discovery. It's looking for a top. It hasn't found its top, but it's looking for one. So if it's gold, it's extremely likely that it's found its top. If it's red, it's just looking for a top. It's distributing, if you will. So if we look at the last few gold signals, you can see you had one here. You had one here, which was a little bit of a fake out. You had one here. You had one up here. You had one here. Here. Here, which turned into a bear div. Here, which played out the bear div. And now we're currently seeing one. So as you can see, this one succeeded, short term. This one succeeded. This one succeeded, but turned into a bear div. This one succeeded. This one turned into a bear div. This one played out the bear div. And now we're currently getting one here. So the crazy thing about these, both tops and bottoms, when it gives you the signals for the bullish reversal or the bearish reversal. Hey, Paradigm, I appreciate that, man. What is that, 500? 500 bits, man. I appreciate. Oh, no, it's not 5. It's 1,400. I appreciate that, man. Jesus. Thank you, man. That means a lot, dude. Appreciate the support, man. You got me off train. What was I saying? Oh, sorry. Okay, so even if it signals a top and then it starts to fail, more often than not, that failed signal is turning into a bull div or a bear div. So it's actually not a failed signal. It's just playing out a little further. That's where the price line comes into play. If it starts to give you signals of a top, so for example, what we just saw yesterday, if it starts to give you signals of a top, but it's not really playing out, it's not really giving you that signal, if you wait to see if it turns into a bear div, so if it forms a higher high, but then your price line or your trend line gives you a lower high, it's playing a bear div. So it signaled for a top here. It signaled for a top here, and then it kept rising. But as it kept rising, it created a triple bear div. Hey, another 100 bits, man. I appreciate that. Thank you, dude. Appreciate the support. But yeah, so as it continued to rise, I actually called this out in Discord right before it dumped. It gave you a bear div. So even though it signaled a top and then it failed, it was still actually the top. That's what we're going to look for here on this most recent signal. Is if this gives you a top signal, so if your trend line gives you a gold signal and then it turns off and price is falling with the price line, that is your top signal. So as you saw here, you have the gold, which is it's an alert. It's not a signal. The gold is an alert. It's alerting you that somewhere, I went way too far. It's somewhere in this price action, it's going to be finding a top. And then it turns off right on this candle here. It turns off. If price is falling with the price line, more often than not, that is going to be a top. If the momentum is falling when that gold signal turns off, like it was here, you had your gold signal, which is your warning. I keep saying a signal. I should say warning. I know I'm probably confusing you guys. You had your gold warning here. So it's warning you that it's finding a top. Very likely it's going to find a top. And then price started to fall with the price line. Momentum was falling. This became a top. So what we wanted to see here was we wanted to see warning of a top, price begin to fall with the price line. Then we start to see a failure, but we don't see it here. We see a bear div. The price begins to rise. We take our momentum from our price line, which is your local trend. Momentum is failing as price is rising. So this becomes a bear div. So if you were still in this short, you could have added to your short. And then you actually continue to rise again. And this just turns into a further bear div. This is a triple bear div. You could have added to your short yet again. And this one actually gave you a warning for these two bars, which are the two top bars. It gave you a warning, and then it gave you a signal. Actually, I pushed that one too far. It was here, and it actually gave you a signal right there on the top. You see how it turns gold, then it turns off? So your next candle right here is your signal candle. Forming a top, failed. So before I go even further, does that all make sense? Does the gold warning you and then the gold turning off, does that make sense? Because this is the only way to teach this indicator, because it has so much shit to it. I have to break it down step by step. And you have to learn each process one by one. So overall, everything I just went over, if I had to sum it up in a few sentences, the gold is a warning that a top is very likely to be forming. When the gold turns off, if price is falling with the price line, the histogram, the likelihood of that being a top increases. So it becomes extremely likely that will be a top. And vice versa for purple and green. If it's purple, it's warning you that this is extremely likely that this is a bottom. If the purple turns off and price is rising with the price line, the histogram, it becomes even more likely that that is becoming a bottom. Okay? So now if that makes sense, I'm going to go into the things you want to look for that will contradict that. So let me see. I'm probably gonna have to go to a higher time frame. Okay, here, this is a pretty good example. So when you see massive trends, when you see very strong trends, every reversal indicator is going to get killed. But the thing with the Momo is, if you just pay attention to the signals directly, it's not going to get killed in every way. So let's look at it before it started to break out. What do we see here? We see a bottom signal. We see purple. Purple lets go. Price begins to rise with the price line. That becomes your bottom. So then we see, it's going to be hard to hear, let's zoom in. Then we see a top signal, which becomes a pullback. We have a top signal here, which becomes a pullback. But this becomes a bear trap. So this is the other signals you guys want to look for. If you are in a strong uptrend or strong downtrend, first I'm going to go over the uptrend. If you're in a strong uptrend and you see that your trend line, the line, is above 10 and you're ranging, you're looking for a top, you're finding a top. If it's shaded red here, that means you're finding a top. If you are finding a top and you start to level out around 15, you can see here this is almost exactly 15. It's like 14.6 and 15. If you start to level out around 15, and your price line, your histogram, does one of these, where it pops up to 10 or inside the top range, and then begins to fail downward. If your trend line remains flat, and this pops back up, this has triggered a bear trap. So this becomes a bear trap. Does that make sense? I'll go over it again. If the trend line is on a if price action is on a strong trend, and the trend line is finding a top, but then it levels out at 15, or very close to 15, and then your price histogram begins to run away from price back to the 0 line, but then it starts to increase with price again. The price is increasing, the price line is increasing. This is the pattern you're looking for. Trend line, histogram. Your trend line's here, your histogram comes up, goes to 0, your trend line does not move, or it moves very slightly, and then your price histogram begins to rise again. Basically, when it starts to rise, like right here, this is your bear trap signal. So once it started to rise again, you see how it's closing this gap? Think of this as a gap. This is a bear trap. So if you would have shorted this signal here, you would have got out with a small loss or break even once you started to see it play out as a bear trap, and you would have flipped long. Okay? So now you're holding your long because your trend line is steady. If your trend line is steady at 15, that just means your trend is very healthy. Your trend is very, very bullish. So if your trend line is steady at 15, that means your overall trend is very bullish. So you saw another bear trap here, where you had the price line go to 0 and then pop back up. This is a very good long signal. If you see the trend line being flat, and your price line goes to 0 and pops back up with your price, that is a very good long signal. Okay? So now we're still steady at 15. We start to rise. Okay, now we start to get a little extended. You've been gold for very long, so that means it's finding a top. It's very likely that it's found its top, or it's very close to finding its top. But because the trend line is not breaking below 10, it has not found its top. As long as the trend line is above 10, this is your finding your top range. You see how the shading never turns off? If the shading never turns off, that means you have not found your top. It is still in price discovery. It is still looking for its top. So what do we see here? We see another bear trap. So what did I just tell? Oops. What just happened? Here we go. So what did I just tell you? That if the trend line is steady at around 15, and then you see the price line along with price start to fall downward, approaching the 0 line, but then we start to curl back up. It's kind of like a cup. Think of it as like a cup and handle. It's kind of like a cup and handle. If it cups, you're very likely to continue upward. As we saw here, we continued upward. So it warned you that it was looking for a top, right here, the gold, looking for a top. You saw a small pullback, which turned into a bear trap. Once this turned green again, you saw the green bar here. This is signaling you that this was a bear trap. Hey, Goat. I'm a complete beginner to trading thing, but very interested. May I ask if you're full-time job or not? Yeah, I do this full-time currently. I stream, I post videos on YouTube, I work in Discord, and I trade. Okay, so now that I've went over the top reversals, the bottom reversals, the bear traps, is there any one of those stages that I need to go back over? Is anybody confused about the bear trap signals, the finding a top or finding a bottom? Is it not better to, sorry, Jesus. Is it not better just to look at different time frames to see momentum to find bear? No, of course. Of course. So on my other monitor here, this is what I do. This is on my other monitor. These are my favorite time frames for the Momo. 15, 1 hour, 4 hour daily. And I'm going to go over this. I'm going to go over this in just a little bit. I'm going to go over using the Momo on different time frames. I didn't want to go over that right away because I didn't want to confuse you guys. But yeah, for sure, for sure. Okay, so I don't see any questions, so I'm going to go over the bull traps now. Let's see if I can find any bull traps. Okay, so here. Hey, no problem, man. I appreciate you being here. Yeah, the replay will be. I made all my VODs on Twitch available, so you'll be able to watch it. It will also be on YouTube in like a week, probably. Yeah, man. Appreciate you stopping by. So, okay, now you guys know about the bear traps. We're going to go over the bull traps. It's the same exact pattern on the downside, so I'm not going to spend too much time on it. Because you guys should already understand the pattern, but I'll show you. So, first off, we look for price to be heavily trending. You want it to have a strong trend. Okay, we have a strong trend, right? You want to see that the trend line, the actual line, is in the finding a bottom range. So as long as we're below -10, we're finding a bottom. Okay, check. We have a strong trend. We're below -10. Check, check. Okay. So now, god damn it. So now we want to look for price to be leveling out at around 15. So once prices began to start leveling out like it did here, then you want to look for the trap signal. So once you start to level out, you look for the histogram to start approaching the 0 line. And then when it starts pulling back to the 0 line along with price, that triggers your bull trap. It's basically telling you do not want to be longing this. This is not a proper reversal. This is a trap. So as you see, once this triggers red, you see how it gets to 0? It doesn't get much above 0, and then it triggers red. Once this triggers red, like it does right here, you are shorting that. That is a bull trap. You're shorting the bull trap. So once again, you have a strong trend. Your trend line is below -10. Your trend line begins to flatten. Your histogram begins to shoot back up to the 0 line. But then it reverses while this line is flat. Once it turns red again, this is your bull trap warning. You have green, red. Once it turns red again, that is your bull trap warning. So notice the difference. Let me delete everything. Notice the difference between these two peaks here. Both of them are signaling bottoms. You have a gold signal here, which is hard to see because of the histogram. I do apologize. Pine script is really tricky with the shading. It does not allow me to put the shading above the... it doesn't allow me to affect the shading any further than I already am. So this is an issue when the histogram is covering the shading, but I can't fix it, sadly. Pine script doesn't really give you many options to fix that. But yeah, so look at the difference between this bottom and this bottom. This was the actual bottom on Bitcoin. So it signaled the complete bottom of Bitcoin in 2018. It actually signaled the bottom before, and it gave you a bull div. So we have a bull trap and a proper bottom. Why is this a proper bottom? Because there was no trap signal here. This one had a trap signal and failed. This one began to rise with price. You see how the trend line is rising with price? That is a proper trend. Or sorry, excuse me, that's a proper bottom. If the trend line begins to rise with price, that is a proper bottom. If the trend line fails to rise with price and it signals a trap, that is not a proper bottom. You can even detect that this is the overall bottom on Bitcoin with the bull div. You have a bull div on both the slow and fast line, the price line and the trend line. Okay, does that all make sense? So far I've gone over finding tops, finding bottoms, bull traps, bear traps, and that's it. Do all four of those stages make sense? Because there's still more. I still got to go further. If you guys have any questions, let's post them in chat right now. I'll go over them. Litecoin has some good examples too. For what? For the bull traps? Yeah, beautiful. So like this is like picture perfect bull trap here. And you also have a bull div. Very slight bull div, but it's still there. So when you start to see price rise here, but then it starts to like fail. So obviously the traps are much easier to see in hindsight. If you're trading them, it's best to just wait for it to turn. So if it's a bull trap, it's best to just wait for it to turn red. So once it triggers. So once it goes from green to red and then price starts to fall, that is your trigger. Looking at it in hindsight, this is your warning. That's your warning. Once it goes back down, that's your trigger. Okay? Because obviously when you're watching them live, this is going to look very similar to this. But look at the difference in this. Look at what happens. This one barely breaks the zero line. It's just a little bit of a trap. You see, they're just traps. That's why they're called traps. It's just it's a small little move. It fakes you out. It breaks the zero line. It tries to think it's going to go up, and then it traps you. But this one here, this one really broke the zero line. The trend signaled the bottom right here when it let go. So when it turned purple and let go, it's signaling your bottom. That is your bottom. So you can long here, put your stop below the bottom. And then just start to take profit on your sell signals. So for the traps, you always want to wait for confirmation, because the traps will look very similar to real moves if you do not wait for confirmation. Okay, let's go back to Bitcoin. I've just checked your YouTube channel, but I haven't found any beginner material. Could you please tell me where I can find a tutorial? So I have an actual entire beginner guide. It's my trading course that used to be a paid course. I'm going to be releasing that for free very soon. I don't have it just yet, but it will be released in probably like a week or two. It's a over 200 slide PowerPoint that goes through it goes through 12 different topics. It goes through like basic technical analysis, trend analysis, volume trading, volume profile, VWAP, bull divs, bear divs, how to use price levels, all kinds of things. And that will be released very soon. There is beginner material on my YouTube. I go over stuff so a beginner can understand it. I have teaching technical analysis in under 10-minute videos. I didn't do very many of those because people they didn't get a lot of views. People didn't really like them too much. But any of my highlights where I go over key support and resistance, fractal trading, accumulation distribution, all those are going to be very helpful for you to start trading. But yeah, I have a whole course coming out very soon for free. So I'll keep you posted on that. Just follow me on Twitter. I'll let you guys know. It actually has videos tied to it, but I'm not going to release the videos because I want to remake all the videos before I release those. Okay, where was I? So we went over finding tops, finding bottoms, bull traps, and bear traps. Okay, now we're going to go over the momentum aspect of it. The momentum aspect is the correlation. The correlation between the histogram and the trend line. If you find it easier, this was actually first developed as a line, so they were both lines. If you find it easier to detect the momentum aspect with the lines, feel free to use that. It's all preference, obviously. But okay, so the momentum aspect of it. You want the trend line, the actual line, and excuse me, and the histogram to be trending in the same direction with price. So for example, obviously the histogram is always going to be choppier because it's a very fast histogram. It only looks back 3 candles. It is very fast. So it's always going to be choppier. Just pay attention to the overall direction of the histogram. The trend line is going to be much easier to find the overall direction. So if your price is rising, and your histogram is rising, and your trend line is rising, that is a very strong uptrend. And then we start to see traps. So if the trend line and price line are correlating with price, your trend is strong. So if, like right here, price is falling, trend line falling, histogram below 0 falling, that is a strong move down. That is a strong trend down. Be very careful trading against that trend, trading longs. Same with this. Price is rising, trend line rising, histogram above 0. Be very careful trading against the trend unless you have clear signals to do so. Does that make sense? So if price is rising, trend line rising, histogram rising, your trend is strong. Try to avoid trading against the trend unless you are given proper signals to do so. Given trap signals or given top signals. Same thing for a downtrend. Price is falling. Trend line falling. Histogram falling. Be very careful trading against that trend unless given proper signals. You can see this on every time frame. 15 minute, 5 minute, hour, 4 hour, 12 hour, daily. The way I design this indicator, it is not time sensitive in any way. It is fully based on price action. So you can use it on any time frame. Just know that because it's price action based, the higher time frames are going to have stronger signals. So if, for example, your daily is giving you a sell signal and your 5 minute is giving you a buy signal, then obviously your daily's going to be stronger. Okay? So let's look at it on a 5 minute. I'll show you exactly what I'm talking about. You can see here that the 5 minute is going to give you much more signals. It's going to be much choppier because it's based on price action. So yes, it's going to alert you. It's going to alert you to finding a top. It's going to alert you to finding bottoms. It's just going to be much smaller moves, much smaller bottoms, much smaller tops. Don't think that because it alerted you to a bottom on a 5 minute, that okay, this is the bottom. It's never going to get below this price. So like I'm looking at a daily, that's my bottom. Don't do that. That's not how you want to be using this. If you're looking at a 5 minute, trade the 5 minute. If you're looking at a daily, trade the daily. Unless you're going to start to do what I like to do. I like to look at multiple time frames at a time. Let me move my Twitch over here. So what I like to do, sorry, this is going to be hard to look at 4 screens on one monitor. I like to look at the overall trend of the Momo on every time frame. So the 15, the 1 hour, the 4 hour, the daily. If they are all correlating across all time frames, so for example, on the daily, we're finding a top, right? But we're in a very strong uptrend. So we have some we have some bear traps, but we're distributing. So if we start to see a distribution pattern, the trend is starting to weaken. We're distributing on the Momo, meaning we're finding a top. We're starting to get that signal, the gold signal, which is very likely that we're finding a top like we saw here. Very likely that we're finding a top. Then we start to go lower. Okay, what's the 4 hour telling me? Let me find this top. Oh, this top is right here. Okay. So on this top here, when price is starting to shoot up, price is starting to rise rapidly, I'm alerted on my Momo that it's very likely that it's coming close to a top. So longing the top is not a good idea. So let's look at a 4 hour. What's the 4 hour telling me? 4 hours telling me the same thing. We're finding a top. And let's go down to an hourly. Let's find it on an hourly. Where's the hourly? I need to find that same move. I think it's right here. Okay, what is the hourly telling me? The hourly's telling me we are very likely to find a top here. Okay, let's go even smaller. What's the 15 minute telling me? Alright, this one's going to be a little hard to find on the 15 minute. Right here, okay. What's the 15 minute telling me? The 15 minutes telling me we are very likely to find a top here. So, okay, if I'm looking to short, we have check, finding a top, check, finding a top, check, finding a top, check, finding a top. So we have that gold there. The gold let go, and price is starting to fall rapidly. So once that loses that level, you have an extremely high chance that that is your top. Because you're not only finding a top on the 1 hour, you're finding a top on the 4 hour, you're finding a top on the daily. So once that loses that top, once it loses that level, which is the last support before the impulse, you can easily short that without a doubt. Short that, put your stop loss below the high. Easiest short of your life. Does that make sense? Multi-time frame confluence, exactly. That's why it's so helpful to not only watch this on a 15-minute, not only watch this on an hour, not only watch it on a 4-hour. Because if you're watching it on only a daily, yeah, it's telling you it's finding a top, but these moves are massive. It's like, okay, this is finding a top, but that's 10%, man. When's it gonna top? Okay, let me break it down. I'm gonna break it down to a 4-hour. We're gonna get even closer view. Where does it look like it's finding a top? Okay, it's still finding one, but it's still not there. And then you break it down even further, the hourly. And then even further, the 15. And then once they all line up, you take trades in that direction. Let me pull up some examples. These examples might help you guys. So like this one here. Let me go back. Let me open this in a new tab. And this one here. So this is, you guys are probably like, oh, this is hindsight. Okay, so if you think it's hindsight, I'll show you 2017. This found just about every single bottom in 2017. You can see here, this is a different Momo. It was before the new version, so it's going to look a little different, but the calculation is the same. So the greens here are when it's finding a bottom. You can see it alerted you to every single bottom in 2017. So, okay, let's look at the tops. This is the tops in 2018. So we see finding bottoms in a bull market, finding tops in a bear market. Because this is what you want to trade. You want to trade with the trend, right? If you're in a bear market, you want to short the highs, and you're in a bull market, you want to buy the lows, right? So as we can see here, it finds nearly every single top in the 2018 bear market. Just by looking at the trend line. That's not taking into account the traps, the divergences, the fast line, the momentum, any of that. Just the slow line. Just one aspect of this indicator was able to find every bottom in the bull market and every top in the bear market. So if you've been watching since the beginning of this stream and you're still like, what the fuck is he talking about? I don't understand how to use this indicator at all. Just break it down piece by piece. Look at the trend line. So here, I'll pull this over here again. Break it down piece by piece. So first, take a look at the trend line. Once you see how the trend line is acting with price, okay, we're finding... You see that we're finding a top, finding a top, finding a top. Okay, let's go. And then we find a bottom, find a bottom. And then let's go, we find a bottom. This is how your trend line acts. It shows you the overall trend, right? So once you understand how the trend line works, start to use the price line. Take the trend line off. Let me get rid of the shading, it'll be easier. And then once you start to see how the price line works, then you can start to use them together. Then you can start to look for traps. You can start to look for divergence. You can start to look for momentum. Just break it down piece by piece until you finally understand what each piece is telling you. You see how we found the divergence there, failure downward, played the div. Found the divergence there, failure upward or breakout upward, played the div. This is your div finder. The histogram is your div finder. You can use the divs with the trend line, but they are extremely rare. You don't see them very often. I actually posted an idea that got banned on Tradingview. Let me see if I can pull it up. Tradingview banned a lot of my ideas. Here we go. This is how powerful it is at finding divergence. In this small little time frame, this is 6 days. In 6 days, it found every single divergence. You had a bear div here, failure. Bull div, move up. Bear div, failure. Bull div, move up. Bull div, move up. It finds nearly every single div, and it finds divs that are not found on RSI and MACD. A lot of them are the same divs, so you can use the RSI and MACD as a confluence, but it will find divs that are not on RSI and MACD. It's been a very long time since I've made a video about this indicator because I really hate shilling stuff. I know it seems like I enjoy doing this, but I'm not a shill. Anybody who's been in my community since day one, I fucking suck at marketing. I suck at shilling stuff. Every time I try to tell people how to use this indicator, I just feel like I'm selling it to them. So that's why I don't do these videos very often. But yeah, I do need to work on that. But yeah, so what were you saying? The sell signal. Yeah, no, I hear you. I do need to get better at marketing. It's just I've never been a salesman. I did sales for a few years. That's the job that I quit to become a trader. Actually, I literally became I quit being a salesman to be a trader, and now I'm back to being a salesman. So it's like fuck. But yeah, so your sell signal here. If we're looking at not the warnings, but when the trend finally fails. So when you see this, when you see the shading, which I've gone over multiple times, the shading is it's not a signal, it's a warning. It's warning you that this is finding a bottom. It's looking for a bottom. So obviously it starts shading the bottom here. It's not like, holy shit, that's the bottom all the way up there. That's not what it means. It means that price is entering the discovery phase. It's finding a bottom. So from here to here, it's finding the bottom. But okay, where does it let go? This one lets go very late because this is on a daily, obviously. But if you would have taken the purple shading, it let go a lot earlier. So it let go of the purple shading right here. But the overall trend shading, it let go a lot later. Love your content. Hey, man, I appreciate that. I've been trying to put out a lot of content lately. I'm trying to get back at it. I took a pretty long hiatus away from the content creation, but I'm going to be pumping out content this year. But yeah, okay, so where were you saying it gave you the signal? It gave you the signal at 16K. Are you talking about right here? Or are you talking about when it let go of the gold? So this one gave you a little bit of a warning. It gave you a bunch of these little warnings back here on all these little dips. You can see all these little dips, it called all of them. It called that dip, it called that dip, it called this dip, and then this was the final dip. So it alerted you to all of these dips. This is what it does. It alerts you that it's very likely that it's going to be pulling back. So then you had your massive warning. Okay, now it's seriously trying to let go. And it tried to let go here, created a massive bear div. Look at this. This is a triple peak bear div. Triple peak bear divs almost always play out, which this one did. You had a triple peak bear div. One drive, two drive, three drive. And then you played out. It gave you your final let go warning. The trend was letting go right here. One candle away from the all-time high. It was one candle late to the all-time high. So even in hindsight, you could have got in one or two candles late, you would have been fine. Then it gave you the serious let go warning when it let go of the trend. So it gave you the warning that it was finding a top, very likely that it just found a top. And then it gave you the signal that it did find a top. That is the top. So once it gives you that signal that it found a top, you can take a level and just take the top. So once it lets go, that has found a top, there you go, boom, that's your top. So same thing here, once it finds the bottom, you can take your level and you can confirm your bottom. So same thing here, it finds the top, wherever it started finding the top, you take your level, there's your top. Finds the bottom, you can mark your bottom, okay. Finds your top, we can mark our top. There, you see that bottom was tested? That bottom was tested, but it gave you a bull div. Same thing here, double sell. So here's your actual warnings. I'll show you your actual, there's your actual warning turned into a bear div. But like I said, even when it's wrong, it's right. It was wrong, then it was right. Okay? So here you have your other warning. You let go of your warning. You let go of your trend right here. So you can mark your top. There's your top. And what do we see here? Lower high, lower high, lower high. I'm not going to lie and said that I didn't see this, or that I did see this move coming, because I was one of the people who was long here. I had a strategy in place to play this, but I was too euphoric. I heard about all the fundamental news coming out, all these ETF bullshit and all the backed bullshit, and I was 100% euphoric. I thought we were going to bounce off 6K, and I got liquidated on my small account. I took a big loss on my big account. I did not follow my plan to hedge at 63, which was the perfect fucking hedge. I told everybody in Discord I was going to hedge at 63. I didn't do it. It was a bonehead fucking move, but we learned from our mistakes. Let's go back to what I was saying. So we had another signal there. I'm just doing the tops for now. I'm not doing the bottoms. I could do the bottoms, like you have a bottom here, but it's going to get very hectic. It's okay, you have a top, and then you finally signal that that is a top right here. So you can take your level. There's your top. Same thing here. You signal that this was a top. You can take your level. That's your top. Hold on, let me delete everything here. Let's delete everything. Let's go right before the crash here. What do we see? This signaled that you were finding a top, and we dumped, right? So once it signaled that this was a top, like right here, on this candle, it let go of the shading. So you can take that shading move, that high, that point, that is your top. Okay? So then what do we see? We see that massive candle there, but that was a bullshit candle. If you guys remember what that candle was from, that candle was from the BitMEX maintenance. So you saw the BitMEX maintenance, and then it shot up, and then it died. So we had the BitMEX maintenance. It tested that high, was not able to break that high. Once you saw this here, I should have shorted this into the ground. In hindsight, obviously. The Momo told me 100% to short this into the ground. And I didn't listen. We were not able to break this high. You see the Momo turning red, price turning red, the trend line, everything's correlating downward. Fast line down, trend line down, price down. It's telling you to short this into the bottom, or into the ground. Another thing I didn't go over is when these lines are very close to each other, it's hard to see with a histogram. This was one of my, I was actually the one I liked the line. Everybody I gave access to the Momo, they all turned it into a histogram. I was the only person to use the line, and they finally got me to switch over. But this is the one reason why I like the line more than the histogram. When these begin to pinch together like this, you see how they're correlating? You see how they're correlating? They're both going up. That's telling you that that's a strong move up, but then it was a trap. So then it signaled red, green to red, green to red. If they are pinching like this, if they're very close together and they're pinching, that is a very strong move. So like if that's a down move and they're pinching downward, that's a very strong down move. If it's a move up and they're pinching upward, let me see, like this. If it's a move up and the lines are pinching upward, that's a strong move up. It doesn't happen very often, but when it does happen, it's a very strong move. Like here. They start pinching together and moving downward. Strong move down. You saw a nice little 40% move down. They pinch upward here. Look what happens. They pinch upward. We break out. 50%. So when you see them pinch together and they start to correlate, very rare, but when it happens, it's very strong. Kind of like here. When we finally start to see the trend really start to shift on Bitcoin, you see them start to pinch together and it shoots up. So that is the one reason I think the line is better than the histogram. Everything else, the histogram's better. The histogram's better at finding divergence. It's better at finding traps. But the pinching maneuver is better on the line. But alright guys, I think that is just about it. I said I wasn't going to go into too much depth, but I actually went over just about everything. That's usually how it goes. I say I'm not going to talk for that long, and I talk for an hour and a half. So if you guys do not have access to this indicator, it's available for free right now. It's not going to be available for free for long. I used to sell it, and then I stopped selling it. Now I'm gonna put a new package together in the future, and I'm gonna sell it again. But until I start selling it, it's open for free. So if you guys want access to this to test it out, send me your Tradingview name, and I'll give you access. I can't do it on stream. I'm gonna do it off stream, but send it to me in Discord or on Twitter. DM me on Twitter, or send it to me on Discord. Don't post it in chat. If you guys would like access to this, just let me know. If you guys have any questions, if none of this made sense to you at all, let me know, because I really want to make a good video on how to use this indicator. Because I have people that have been using this indicator for months, and they still are like, what the fuck am I doing? I really want you guys to understand how to use this, because it is the strongest indicator I've ever used. I know I'm obviously biased, but you can ask other people that are not biased for testimonials on this indicator. They'll give you honest opinion. Oh, sorry, yeah, good point. The breaks of 20 and negative 20. Extremely rare. Extremely rare. If it breaks 20, it is very, very likely that that is going to be a high. It's going to be a top. If it breaks negative 20, it is very, very likely that is going to be a bottom. The only exceptions are in divergence cases like we see here. The only exceptions are in divergence cases when it breaks 20 and comes back. Or if it breaks 20 and then begins to flatten out at 15. Or negative 20 and flattens out at negative 15. If it breaks 20, let me see. Like here. If it breaks 20 and then starts to flatten out around 15, that is entering an extremely strong uptrend. If it breaks negative 20, let me see if I can find one here. If it breaks negative 20 and then starts to flatten out at negative 15, that is entering a very strong downtrend. The only exception, like I said, is divergence. Divergence or flattening out. That's a very good point that I should have brought up. I think I did bring it up. The divergences on the trend line, extremely rare, but when they happen, they play out almost every time. High strike rate. If there's a divergence on the trend line, not the histogram, very unlikely, but when they happen, their strike rate is very high. Okay, now I think I've gone over everything.